would like, if I may, to take you on a strange journey.
Hello, everyone, and welcome to another edition of Real Estate Realities with the Rebel Broker. My name's Robert Whitelaw, and I am the Rebel Broker. Licensed real estate broker in the state of California. Member of the National Association of Realtors. But please don't hold that against me. Kicking off another week, a special week, because today is the day that we announce our winner of the I don't have a sexy name for it. The demographic survey $50 Amazon gift card. I drew the winner late on Sunday, and I would like to congratulate Shannon. I hadn't heard back from Shannon as of the moment I was recording this, so I'm assuming that her email is good and that she will get back to me, and I'll be able to send that right off to her. But if your name is Shannon and you filled out the survey, then congratulations. Go and check your email address that you used to contact me, because I'm asking you to verify that the email address works. And once we have verified that, I will be happy to send your $50 gift card your way. I'd also like to thank everyone else who has participated so far in the survey. You can still join in and offer up the information relating to your demographic information for the survey. Just head on over to therebelbroker.com. Click on the little red button at the top of the page titled Take the Survey to support the show. There will be another drawing on November 1st, so we've got 30 days to rack up more folks to get a chance at winning another $50 gift card for Amazon. So please head on over, take a few minutes out of your day. You'll be spreading some love and helping the show, and you'll also be earning yourself a shot at earning that $50 gift card. So thank you very much for doing that. As always, the other stuff you can do at the site include things like reaching out to me. Just click on Contact the Rebel Broker. Feel free to send along any ideas, suggestions, observations, or questions that you might have, and I'll be happy to offer any thoughts I might have. I want to thank folks who've recently really sent a lot of different things my way over the last week. I'm not real sure what happened. Everyone got email happy recently. Thank you for that. So I apologize for anyone who it's taking me, for folks who might be wondering why I haven't replied yet. I've probably got you in my queue of stuff to consider. I haven't been able to reply to everyone yet, but just so you know, I am working through that. And finally, I invite everyone to join the Insiders group. That's going to be folks who are going to get information before everybody else. And as soon as I start offering different types of data, whether it's going to be PDF files or that give you some insights into different things, or maybe a form that you can use for something, or a step-by-step type of thing, those are going to get provided to the folks on that list first. The way to get on that list is to text the word Rebel Broker to the number 44222. That's text the word Rebel Broker to the number 44222. Okay. As frequently happens, about every month, we cover the hottest real estate markets. This time we're going to be covering the hottest markets for September. And it's interesting to sort of note how these communities move up and down the list. And it's also interesting to note that we see two types of properties that tend to be on this list. The places that are ridiculously high priced and make it really difficult for folks to jump in and invest. And then other places that actually represent some interesting opportunities. So let's sort of jump in here and look at this. This is a list from Realtor.com. And to lay out kind of how the list gets put together, let me just use their explanation. Quote, in gauging which real estate markets were seeing the most activity, our economic data team took into account the number of days that homes spend on the market, a measure of supply, and the number of views that listings on our site get. That's the one I like. That's what makes this list sexy, because it gives you a real-time estimate of where folks are spending the most time looking. And I think it's probably one of the best measurements of demand. Continuing to quote here, the result is a list of the nation's hottest real estate markets where inventory moves 23 to 43 days more quickly than the national average, and listings get 1.4 to 3.7 more views than the national average. So let's see here. The first things to note, I guess, I always like noting the cities that are new to the list. New to the top 20 this month is Grand Rapids, Michigan. Like other cities on the list, Grand Rapids includes the greater metropolitan area, which in this case takes in Wyoming, Michigan. Similarly, our number one market, San Francisco, also includes nearby Oakland and Hayward. Okay, and it would have to. That explains numbers we've seen in the past from Realtor.com where they're blending in other marketplaces, and we're not seeing exactly the same thing. Now, what we'll go through and note here is its current rank on our list, what it ranked in August, and the change this month. So Grand Rapids, of course, is brand new to the list. It comes in at number 20. It was 21 in August, so clearly it moved up one on the list. Number 19 on the list is Nashville, Tennessee. It's currently, as I mentioned, number 19. It was number 20, so it's moved up one on the list. And let's also take a moment out here and recognize that Nashville is another one of those cities that has popped up on a number of different estimates of attractive locations, attractive marketplaces. And whenever I start to see those kinds of crossover, I think it's worth paying attention to those. So Nashville, Tennessee would be a standout on this particular list in terms of stuff to keep an eye on. Number 18, Kennewick, Washington, comes in at number 18 again with a change of 0 from last month. Number 17, Santa Cruz, California, was also number 17 last month. Santa Cruz is interesting. I have to think that that's a greater area thing as well. I used to live in the Santa Cruz area. And remember, one of the key things is more folks looking. It's not just about how much things sell for. That's one reason why I like this list. We talk about other lists that sort of rank these things based on highest prices people are getting or how much real estate prices have increased. This doesn't. This tells us, well, sort of merges two things. It merges the days on market as one thing, as a gauge of the market. But then I think even more importantly, it takes into account the attention it's getting online through Realtor.com. And that's a huge deal. So I'll continue with the list, but I think that's one reason why I think this is such a cool thing to keep in mind, because it definitely tells you where eyes are turning to most, and in fact also gives us an idea of what places might be declining in appeal a little bit. And as we'll see, there's a couple of those here on the list. There's a couple that have jumped up the list by quite a few chunks that might be worth looking at. All right, so number 16 on our list is Colorado Springs, Colorado, coming in at number 16 this month, and it was number 16 last month, so no change there. Number 15, Santa Rosa, California, came in at 19 last month, so that has it rising 4 on our list. Number 14, Detroit, Michigan, was at number 9 last month, so it declined by 5. I think it's interesting to note, we talked about Detroit on a very recent list, and it's interesting to note that the number of folks looking in Detroit has decreased. The amount of attention it's getting has gone down. We talked a little bit about the importance of ground truth with a city like Detroit, where it faces a lot of challenges. Places like Chicago are similar. But it's one of those things where definitely there's opportunities there, but only opportunities for the well-informed. Coming in at number 13 on our list is Yuba City, California, coming in at number 12, down 1 from last month. Number 12 is Columbus, Ohio, another city that's popped up on several lists in terms of attractive investment opportunities. Came in at number 7 last month, so that's down 5. So that might be a town that might be worth looking into to see if there's an opportunity there, because less folks are out there looking at it, or maybe the demand in that marketplace in terms of online searches has gone down a little bit. That might represent an opportunity for someone. Number 11 is Modesto, California. Last month it was number 13, so it's up 2 on our list. Number 10 is Waco, Texas. It was number 14 in August, and it increased 5 this month, which makes no sense, because if it was 14 last month and it's 10 this month, that would be 4, not 5. So we're going to call it 4. We'll do the math check as we go down the line here to discover that I suddenly have trouble believing anyone who can't subtract 10 from 14 and come up with the answer of 4, at least as it relates to Realtor.com's articles. Sorry, maybe I should have just let that one slide. Number 9 on our list is a perfect example of cities that are difficult, that present ridiculous challenges because there's a very high probability they're at the tippy top of their market. Number 9 is San Jose, California. It was number 10 last month, so it's changed 2 spots since last time. Number 7, Fort Wayne, Indiana, another city that's popped up on other lists that we've considered in terms of attractiveness for investment. Number 7 this month, number 11, number 7 in September, number 11 in August, so it was up 4. Number 6, Stockton, California, came in at 5 in August, so that was a decrease of 1. Number 5 is San Diego, California. It was at number 6 last month, so it upped by 1. Number 4, Dallas, Texas, was number 2 last month and is obviously lost 2 points on our list. Number 3 is Denver, Colorado. Number 3 last month, so it's had no change. It's coming in at the same place. And number 2 is Vallejo, California. It was rated number 1 last month, so it's dropped in the list by 1. And then, of course, number 1 is San Francisco. Last month it was number 4, so it's increased 3. Interesting to note that. This leaves me wondering, because remember, a lot of the things that we saw before, I think the last time we looked at this list, it was interesting to note that what we were seeing was what looked like an awful lot of increased interest in cities outside of San Francisco, as that mushroom effect that we've talked about before was appearing to take place. And just for those of you who are maybe new to the show, that mushroom effect refers to folks who've decided, I'm done looking in San Francisco, the prices are too high, I'm going to go ahead and look in other cities that surround the area. Now that we've seen as we've sort of headed into the general cooling period for the market, where market tends to dip a little bit, I think what we're probably seeing is just a continued level of interest in San Francisco that's matched by a decline in the folks who did their searching in the outer areas. It'd be interesting to see these as just actual numbers. In other words, was it because San Francisco increased in interest, or was it because relative to San Francisco, other areas simply declined around it? My guess would be that there's this sustained idea, but it also might be that as we head into this time when there tends to be less buyers out there, that more folks aren't seeing that as an opportunity to potentially look back at San Francisco and see whether or not there's any quote-unquote wintertime deals to be taken. So it'll be interesting to see how this plays out over time and see if San Francisco will, of course, remain at the ridiculous top of the list. But in terms of proper cities that jump out at me on this list as places that, just because of the amount of movement that we've seen, I would think would be interesting to step back and do a little bit of remote analysis, maybe pull up some values on Trulia and Zillow, see if we can't find out what things rent for, what things sell for, try to figure out what the ratio is there and figure out if there's a positive cash flow possibility. I think some of the ones on this list that would jump out at me would be Fort Wayne, Indiana, Waco, Texas, Columbus, Ohio, and there was one other one, Nashville. Nashville kind of jumps onto my radar, and Chattanooga is still, I don't know why, it holds a special place in my heart. We covered Chattanooga, I think it was way back in January, and Chattanooga had ranked number 1, or no, excuse me, Memphis, Tennessee had ranked number 1, but Chattanooga, I think, had ranked number 2. But the ratio looked better in Chattanooga than in Memphis. In terms of cities that had the highest rate of return. In other words, I invest $20,000 or $50,000, whatever the amount is, and I get the greatest amount of money per year out of that in terms of return on investment. And that's kind of what I focus on. A lot of folks take statistics and analyze and figure out their capitalization rates, and they're really using more general what the property is worth and how much it's appreciated by and a lot of those wonderful things. For me, it's utility of cash. Right? If I have $20,000 and I want to put it into stocks and I estimate I can make 4%, 5%, 6%, whatever on that, I want to make sure that I'm utilizing it as well as I possibly can. And that means that if I have a choice between putting into a 6% increase investment versus a 12%, well, I want to go with the 12%, right? And we had talked about how on average in some of these cities like Memphis, like Chattanooga, there were folks getting 7, 8, 9%, and that's the average. So remember, there are folks above that and folks below it, and hopefully, after listening to this show, you're armed with enough knowledge and enough confidence and enough ability to really analyze what the market's doing to boost that number higher. My goal is I like round numbers, so 10% is a place I don't mind being. And in current investments and current things I have going on, that's a number that I'm comfortable with and that I'm able to make happen. So there's no reason why you can't make it happen too. So these are all areas where you can do a first blush. You can use these lists as a great way to start off, as a jumping point, to give you something to start with, and then run through the process. Figure out what makes sense. And also, just so everyone is aware, I know I've been talking about this one forever, and I apologize that it hasn't happened yet. It's really been just a question of finding the time to do it. I'm still planning on doing the video of a program called Property Evaluator that I use whenever I get into the final stages of analyzing a specific property. I'll always start with what we've talked about here. I'll go to an area, not physically, I always start at a distance. I'll analyze it the way we've talked about here on the show before. I'll look on Trulia, I'll look on Zillow, I'll do a little bit more research. I'll maybe call some local property management firms, find out what they're renting properties for in different areas, and just get a feel for what's going on in these various marketplaces. And for those folks I talk to, I'll ask, what are the most lucrative parts of town that folks want to live in terms of renting? If you're a renter, what's the short list of communities that folks want to live in? And that way you can help focus your search on the places that are most likely to get you rented quickly. Once you've figured all that out, then you start looking for specific properties. And the tool I use for doing that is Property Evaluator. Now, unfortunately, that's a long way of explaining that I am planning on doing a video on how I use that software. And it's going to be more than just here's where you plug in the numbers. It's going to be a demo of the product, but also a demo of the process that I do leading up to even using that. Because the great part is once I find real properties where I can make the numbers work, well, that means it's time to get more real. It's time to actually get yourself to that area and start doing some ground truth research. And that's sort of the final hoop for me. As long as everything works out and the math makes sense right up until that point, I don't feel the need to be there physically. In fact, if I found a deal that I thought was ridiculously awesome and every piece of data pointed to it, I might even be willing to use the tactic that we talked about earlier, where you make an offer on a property without ever even going into it, and just writing in there that you have the right of inspection to check out the property. And then that way you're not going out there until you've actually got a signed contract to purchase a home. I get that starting out folks are probably not going to want to do that. I get that you're going to want to go out there and visit it yourself. Absolutely normal, and I think that makes a whole lot of sense. But once you reach a certain comfort level, you're going to realize that you can absolutely get these levels of commitment, get yourself into transactions, and still protect yourself and protect your interests. So it's just things to think of. For you folks just starting out, we're going to do the video that's going to sort of train you up on how to go from I have found a city I'm interested in to I am now doing property evaluation. And again, I've wandered into the high weeds. I do plan on doing that. That's one of the big pushes. That's one of the reasons why I'm trying to get the demographic survey done, for instance. I'm trying to get the show on a basis where I can devote more time to it. And that's one of the things that I want to do. I'm hoping to get that done sooner rather than later. But just so you all know, I haven't forgotten about it. It's still in the works. Okay, I'm going to take a quick break here for a second. So don't go anywhere. I'll be right back. Are you ready to jump in and start your search for your first investment property? Maybe you've decided that it's time to own your own home, or maybe you're ready to sell your home and move on to something new. No matter what your goal is, the Rebel Broker can help. That's right, aside from hosting this show, I am also the owner-broker of Whitelaw & Sons Real Estate Services right here in Silicon Valley. With over 25 years experience serving Silicon Valley, Morgan Hill, San Martin, and Gilroy, I or one of my great agents can help you achieve your goals in real estate. So if you're ready to look into taking that next step towards achieving your real estate goals, point your browser at www.soldbyrobert.com. That's www.soldbyrobert.com and get in touch. Let me show you how I will earn your business and your respect. Again, that's www.soldbyrobert.com, or you can call me at 408-852-0525. California Bureau of Real Estate ID 00984-909. Welcome back, everyone. We are going down the top 20 list of the hottest marketplaces with a slightly different twist. Now, this one comes to us from Realtor.com. We've already gone through the list, and I called out a few communities that I thought sounded particularly sexy. And I thought it might be good to jump in and do a quick review of what the markets are doing in at least one of those communities that I called out. So number 7 on our list was Fort Wayne, Indiana. Now, this is one I recall being on several other lists. Its rank in August was 11th, so it's increased by 4, so that's increased levels of interest. Now, that may or may not be a good thing for us. Increased levels of interest may indicate that we're seeing more and more competition. However, because we don't get exact numbers on this particular ranking, all we get is the ranking in relation to other cities. We don't get an absolute number. So it may be that if there was a 40% drop in interest overall across the board in all properties or all cities, this list would remain the same, right? But we wouldn't be getting that dramatically important data that tells us across the country there's been a 40% drop in the level of interest in homes, right? So this list is interesting to look at, but you also have to understand that potential downfall of the data. It's not going to give us insights into the change. Like, for instance, San Francisco is number 1 this month. It was number 1 2 months ago. It was number 1 3 months ago. It had several months there where it was number 1 every single time. But that was only in its ranking. We don't know if there's a number assigned to it between 1 and 100 in terms of level of activity. We don't know if that was an increase or a decrease. We don't know where it went. So again, these are all just great lists to sort of get a little bit of insight. So let's go ahead and take a look at Fort Wayne, Indiana. I think the numbers here indicate that, at least in general, compared to other areas, it's had an increased level of interest. That could tell you a lot of things. If you're someone who is already a property owner in Fort Wayne, Indiana, it might tell you that increased level of interest might indicate you might want to convert the home you're currently using into a rental if it's not already a rental. Or maybe you're living there and you're considering a move. Well, maybe you want to figure out some way to do the math so that you don't sell the home. Maybe you want to keep it as a rental, figure out what the markets are doing, and see if you can't generate a little positive cash flow that way. But let's pretend that we're an entry-level person, because if I'm not mistaken, Fort Wayne was one of those cities that was listed among the more affordable places to jump in and get going. So let's go ahead and take a look at the market in general. Now, the Zillow Home Value Index is $93,600. There's been a 2.4% increase over the last year, and they're projected to have a 3.4% increase over the next year. So that's pretty good. The median home value for Fort Wayne is $93,600. Fort Wayne home values have gone up 2.4. We just talked about that. The median list price per square foot in Fort Wayne is $75 per square foot, which is lower than the Fort Wayne metro area of $81. The median price of homes currently listed in Fort Wayne is $115,900. The median rent price in Fort Wayne is $695, which is lower than the Fort Wayne metro median of $697. Now, one reason why and as I go through these numbers, this is Zillow where I'm looking at this, I like to take a look at where things are compared to the past. And this goes back to about 2007 when we were at our peak. And what I like about this is that we are not at the pre-crash peak yet. We are still well below it. Right now we're at 93,540. At the peak, it was 100K. Perhaps a little bit more than that. This only goes back to 2007, so it'd be interesting to see what things were at 2006 and 2005. So it's kind of interesting to see what's going on there. Now, according to the market health measurement, they consider it less healthy, but they don't have average days on Zillow homes with negative equity. They don't have any of that data, so and that's a lot of what they base their quote unquote healthy market on. So we'd have to see. We'd have to figure out what's going on there, because although they rank it as a less healthy marketplace, they're indicating that in their one-year forecast, they're expecting a 3.4% increase in home sales or home prices. So that would be something to consider. Now, of course, what it really comes down to is the numbers we care about most, which include what's it going to cost for you to acquire a property that you can rent effectively. That means all the time, right? You want a 100% rented rate. You want a 0% vacancy rate. And what would be the amount you could expect to earn versus what it's going to cost you to purchase? Can you get that let's round it up to $100,000? Can you get that $100,000 home and have it be profitable for you? So you'd given a conventional loan, you'd have $20,000 invested. Of course, you'd have to figure out what all the expenses are in terms of taxes, insurance, maintenance, all these other kinds of wonderful things. But when I take a look at this, what I am seeing, let's see, I'm going to try to focus in here on the most rentable. So that's going to mean 3 bedrooms. And I see a pretty big variety. I see 75,000, 38,000, 55,000, 50,000. Some with bizarre bathrooms set up. So 3 beds, 4 bath is $50K in this particular one. Now there is the St. Mary's River goes through here. And typically in a community, when I'm looking at something like this, trying to figure out what makes sense, closer to the river is usually considered better. I'm not seeing that being consistently reflected in all of these numbers here. As I scroll around Fort Wayne, for instance, I see a $1.9 million home here, 6-bed. Geez, a 6-bed, 13-bath, 8,500 square foot home. God, I kind of just want to look at that listing just to see what it is. But down the street from it, I see a $270,000 home. I see a $58,000 home, a $95,000 home, a $105,000 home. All of these, right by Lakeside Park, for instance, is where I'm looking right now. But that's really it. That's the standout price I'm seeing. And I have to think that there's going to be some areas here that are very desirable, that folks want to rent. So for the sake of just a quick comparison, I'm going to stick with Lakeside Park, and I'm going to zoom into the area that's bordered by the lake, the St. Joseph River and the St. Mary's River, and I think that's Muyumi River, where Lakeside Park is, bordered by East Estate Boulevard and North Anthony Boulevard. So if you want to do the same thing on your system, feel free to do that, or you can just listen along with me because you're probably driving. Picking up that phone and zooming in on a map is probably a bad idea. But we'll go ahead and zoom in here, and we can see what the prices are for these homes. And this is what I love about Zillow. You can go over and click on rent. It'll leave the map zoomed in at the same level you were on the for sale side, and you can then look in the exact same area and see what homes are renting for. So here we go. Here's an $875 a month home that is a 3-bedroom, 2-bath. And if we then go back and look at homes for sale, and I leave my little cursor right over where it is, literally 1 block away, I'm seeing, I forgot how many bedrooms and baths, I apologize. So $875, 3 beds, 2 baths. If we go back to buy, and we see, let's find a 3-bed, 2-bath. 3-bed, 1 bath for $58,000. 3-bed, 2-bath for $98,000. So for $98,000, you could purchase a home right nearby with the same amenities and about the same square footage. So now I jump into Property Evaluator, I stick in my numbers, I go with what it has, and it always overestimates it a little bit. For instance, it's going to calculate vacancy loss. I do this based on an 8% projected vacancy loss. Cleaning and maintenance. Well, I'm not going to be paying cleaning and maintenance monthly, but I've already got that entered. Insurance. That's going to be something I am going to be paying. Taxes. I will be paying that, but I don't have this calibrated specifically for taxes in Indiana. I'm guessing taxes are going to be, and I believe I'm calibrated here for California taxes, which are a little bit nutty. So we'd see how those play out. But my mortgage payment would be $522 a month. My cash flow would be positive $74 per month, or $893 per year. Now, if we run down what return there is on that, we have to remember there's some other expenses that this is going to calculate out. It's going to include not just my down payment, but also my buying costs. So whatever I paid in terms of closing costs for escrow, title, all that other wonderful stuff. And when we go down and analyze that, we see that the cash on cash return, which is the number I tend to look at because it indicates how much money did I make off the money I put in, I get 4.1% return on investment. The cap rate on market value comes out at 7.1%, and the cap rate on purchase price comes out at 7.3%. I think that gets skewed just based on the immediate buying costs. Gross annual rent multiplier I have set up is 9.6, and let's see what else here. Where did I go here? There we go. Okay, so. Still good. I mean, 4.1 isn't exactly rocking it, but that assumes I pay full list price. So I'm in positive cash flow here. And you know what's funny about doing an analysis like this is I will frequently get folks, and remember, this is everything. This is me building myself enough of a buffer. So we take the cleaning and maintenance amount of $65 a month that I've put in here, and that goes directly into the bank. That goes into money I don't spend, so that as soon as a water heater blows up or a toilet needs to be replaced or whatever, I've saved up money so that I can replace that. Taxes, I'm saving so that I can pay on the taxes come the end of the year. Insurance, paying that at whatever frequency you pay it, whether you pay it every 6 months, every month, every year, however you pay it. You're accumulating those monies. So this is the whole thing. And this money that we see popping out at the end here in terms of cash flow is the whole thing. Now think about that for a second. I've run through these numbers with some folks and go, oh, well, it's hardly even worth it making that amount of money. Well, it's I get it. I get that more money is good, but you know what? It's all positive money is good money. If you have bought smart, I mean, granted, this is just the number crunching part, but if you've bought in the right market, if you've bought as aggressively as you possibly can, and I don't know what the market's doing. I don't know what the days on market is in Indiana. In fact, let's look that up real quick. Or actually, that was one of the problems, right? When we went and looked at the data, that wasn't available. That was why we were having that discussion about Zillow estimating the market not being that robust, but the numbers it bases that on weren't available, which included days on market. So as a replacement for that, let's look at some of these ones that look the most attractive. Let's go ahead and look at that $98,000 3-bedroom, 2-bath home with 2,500 square feet, and let's see how long this home has been on the market. Let's see, 135 days on Zillow. So that's how long Zillow's had it up as available. It's actually a pretty attractive looking little house. I actually kind of like that. But it's absolutely in that area. With given that amount of time on market, it sure does seem like this is a property that you could absolutely get at below asking price. In fact, what I'm seeing here is the price was dropped on the 27th of last month by $500. The Zestimate has the value at $92,095. And suddenly, if we go ahead and start doing some new math, we suddenly see some slightly more improved numbers. If we were able to acquire that property for $92,000, which is absolutely reasonable, I don't think there would be a huge amount of argument about it. It depends on what kind of work needs to be done. So you'd obviously invest more if you purchased it and found more work to be done. But suddenly the cash-on-cash return jumps up to 7%. So that's obviously a much more attractive number. This even lets you plug in the appreciation numbers that are expected for the community. So that's something that Zillow was theorizing on, and you could sort of try to project down the line what the property would be worth. But as I look at this, this is one that I'd go for. Yeah, I'm a sucker for these kinds of homes. It's built in 1915, so you're going to count on some really amazing woodwork in something like this. Let me just pop it open here and see what we got. It looks like it's part of a row of homes with a similar... Oh, yeah. Beautiful dark woods. It looks like it has some updated tiling in here. Let me see if there's anything that looks just scary. Of course, anything that old, you're going to want to do a little bit of checking and make sure everything's good. So you're going to save yourself a little bit of worry and fussing. Oh, great old classic pocket doors. Oh, my gosh. Oh, wow, that's original hardware on that sliding door. I like that. Some updates in the kitchen and in the bathrooms. This looks rentable like right now. It looks like tile in the kitchen. Good size master bedroom. So someone's definitely remodeled this. You just didn't see these kinds of bedrooms and homes of that vintage. And that bathroom looks a little rough. But obviously I'm going straight off of photos. Everything's brand new. 2 water heaters, brand new HVAC system. That's nice. And it wouldn't surprise me if this is one of those homes that, given the layout, it might lend itself towards being able to be divided into 2 rental properties, although that's 3 bedrooms, so maybe not. And it depends on the rules there in that city. But this is sexy. I think this is a great-looking property. I always get a little excited whenever I do this on areas that I'm looking at, whether I'm doing them for the show or just doing them for grins myself when I'm looking at different marketplaces. This is a great-looking area. So I would suggest everyone run out and buy a house in Fort Wayne, Indiana, or maybe take a little time out of your day. Do what I just did on whatever your favorite little area to check is. This is a great one. I may actually reach out to the listing agent on this one and see if there's any more information on it. I'd love to see if there's any existing inspections. with a 3-bed, 2-bath, and it says it's got original floors in it, and that's awesome. Original floors from 1915 are ridiculous in terms of character. So anyway, I may have just found what I'm going to spend the rest of my day doing. All right, folks. I hope this list has been helpful. It's at least put a bug up my nose in terms of stuff I want to look at. I absolutely appreciate you all taking your time out to spend it with me. I do absolutely appreciate every one of you in my audience, and I love how many folks have jumped in and taken part in the survey. I'm glad I'm able to give a little bit back to folks in terms of doing the drawing, and I look forward to doing it again in November. So make sure to head on over to the website at therebelbroker.com and participate in the survey and take a chance. You never know. Maybe maybe November 1st, I'll be calling your name to send you some money. Thanks again for listening, everybody. I'll talk to you all next time.